mic was unmuted the whole time. I thought my mic was not muted. Let's see what happened. Where is the music? Music. Where are you? There you are. Bring down the music. 5% marker. Okay. How's everyone doing? Welcome, ladies and gentlemen. It's your boy, TraderPrad, and we are looking at some scary events on the market. Remember how I said that 589 on the QQQ is an important level? Well, boy oh boy, 589 has been breached. We are now at 585 on the QQQ here in the after hours, and things are looking scary. In the meantime, TH is being a hate watcher. TH is saying I was cutting off my co-host twice. TH, you have no clue what the fuck you're talking about, okay? So hold the fuck up and shut up for a second, and let me correct you. They want me to control the show. They wanted me to talk more than them. There's a reason why I was doing what I was doing. I was doing what I was told. So TH, shut the fuck up. You have no clue what you're talking about. And in terms of grandstanding, I'm not even grandstanding. It's called having natural energy, which I have on this show too, which I had on Trader TV Live too. But over here, all you guys do is troll me and talk shit, and you know, barely any viewers show up to begin with over here. So how do you expect me to have the same energy over here that I usually have when I have people to talk with, when people in the chat are actually not trolling and having constructive words and so on? So saying that I'm dominating the conversation or I'm interrupting someone is absolutely dumb, and you have no clue what you're talking about, because they want me to control the situation. They want me to control the narrative. They want me to be you know, talking about things that I planned for, and they just kind of said, okay, we're gonna step in and we're going to try and facilitate some information around you so you carry the conversation. So buddy, you have no clue what you're talking about. Before you go out there, just randomly start throwing out big words such as grandstanding and accusing me of doing things that I'm not even doing. Maybe you should know the facts a little bit and you know, judge someone on that. I'm not angry with you, right? It may sound like I'm angry with you. I'm not. I'm just letting you know that you're wrong. You're absolutely wrong. Then you have no clue what you're talking about. But I appreciate your constructive criticism. You know, I think there is some value in what you said. There's always value in something. Always says anybody says anything, there's always value in it. You just have to extract the value out of it. You know, you gotta find what the good things are in there, even though there might not be anything good that you said. You know, find the good value in it and extract out of it. Obi got hot under the collar today. I have no clue what that means. Does that mean he lost money? Does that mean he was trading poorly? I have no clue what that means. But hey, it's Obi. Obi has never been known to trade properly. As far as I've known Obi, he's never been able to trade properly. He gets in his own head. He gets in his own mind. And you know, it's Obi. Obi is Obi. He is his own boss at this point. You know, it's not my priority. It's not my job to make sure he's trading well. It's his own job, and it's his manager's job. So I don't have to worry about what's going on over there. He was bullish while the market was plunging. Well, yeah, that sounds pretty much like Obi. He's always a mean reversion trader. In fact, I caught the mean reversion today, and I had the long on QQQ from 590, but I didn't try the long before 590 at all. I was just being patient, and that's the name of the game, right? Have a setup, know what to do, and know how to get into the trade, which is what I did. I knew what my setup was. I knew exactly how I wanted to situate myself in that trade, and I was able to walk out of the trade profitable. So at the end of the day, that's all you're looking to do. And Obi, you know, Obi's Obi. I have no words for him. Maybe one day he'll you know, stop fucking around and finding out and then make some money for himself. We'll see how it plays out. Anyways, time to talk about our show here. If you were watching the midday show today at 1 o'clock that I do on Thursdays, you know, there was actually a lot going on. Market had a very dark turnaround today around I want to say like 11 o'clock, 12 o'clock. So let me just quickly pull up the charts here for us. Let me pull up some charts here. There you go. So right around 11 o'clock, 12 o'clock, I guess like 10:50, 11 o'clock, just an automatic down move, like a sell program turned on. The sell program turning on and just non-stop downside. Especially after the Nvidia report that we saw yesterday, right? People were expecting Nvidia to, I guess I was expecting Nvidia to hold up and not crumble the way it did, but the whole market just showing you that there is no bids at the moment. The key level for me was this 588.50, 588, 590 area, and the fact that we are below 588, below 590, that's not a good thing. Now we're potentially expecting the market to go test the 200-day moving average, the 100-day moving average. Let me just throw in quickly an indicator here. Where is those are the indicators? No, that's not indicators. Where's indicators? There you are. Moving average. Where's the simple? There you go, moving average simple. And if you go here and modify this input to the 100-day moving average, you can see we just today, after how long? Since May of 2025, we have not tested the 100-day moving average, and now markets tested the 100-day moving average. Things clearly not looking good out there for the stock market. And if you just zoom back a little bit more, the 200-day moving average is right around 543, 550 area, and potentially, like I predicted not too long ago, I even posted a YouTube short, a TikTok short, an Instagram short. Make sure you're following me on all social medias to see those type of cool little infographics that I post up on the social media. I basically said if we get below this 588, 589, 550 pocket zone, we're potentially dropping much lower. Now volumes coming in as we're going down, we're getting a fresh new breakdown. The question is, does this pull back and start looking like this, or does this look like this? So two scenarios possible, where today's low holds for the next few weeks and we manage to go back up, or today's low fails to hold and we start pushing back even lower and actually go test the 200-day as I keep predicting. So lots of craziness going on. I mean, a lot of bulls got caught off guard. Anyone who bought the market overnight because of Nvidia, whoever went long Nvidia itself because of the earnings report, all of them got punished today. And by far the ugliest red candle I've seen in a very long time. I think the equivalent of this candle that I've seen before, you could say this candle was equally as bad. It started around the same height and it ended a little bit lower, so clearly this candle today is a little bit more pronounced. But the last time I saw a candle like that was in COVID. Like, I haven't seen that big of a candle to the downside on the market in a very long time. This is 2020, and honestly, you haven't even seen it in COVID, right? You can't even see it during COVID. Potentially that candle is equivalent. What is that drop right there? That's about 4.5% drop from top to bottom. And what does today come into? 4.5. So pretty much that candle from very long ago is the only reference that we have as to this type of action. We haven't seen this type of action in the market where the market was actually green in the pre-market, gapped up in the pre-market, and now down 2.5%. Insane. On the midday show that I was doing, the 1 o'clock show, Joel, who is one of my bosses basically, Joel, I will also be joining Joel on the December 8th and December 9th 3:30 show, which is their show over there, their time slot, but they wanted me to jump on to that one. They also want me to jump on to some of the pre-market shows, so potentially I'll be doing a lot more content creation for them. The point I'm getting to is Joel was mentioning how these market environments are not looking good. Things are looking scary, and it's time to potentially start even thinking about going 100% cash. I in fact went full cash right here. I went full cash right here, and I pulled out of all of my positions, all of my investments. Yeah, I was a little upset with this move over here, and I was like, ah, fuck me, maybe I didn't time the market properly. But now, hey, look at me. I look like an absolute genius, right? Why am I sounding like a Mickey Mouse? Look at me. I sound like an absolute genius now because I am full cash, and the market is giving me a pat on my back for making the right decision. So at the moment, I'm you know, partying, that I don't have to be stressed about my positions crashing against me. But at the same time, if you just zoom into other positions, like look at Apple. Apple is still at the all-time high area. Look at Microsoft. Microsoft just pulling into the 200-day moving average. Meta a little bit below the 200-day moving average, but Meta going back into previous prices where there was a lot of buying. So, you know, potentially there could be bottoms coming in onto the big tech. And then if the bottoms really do show up, then yeah, market goes back up to the north side. But right now, the way things are playing out, I think, you know, a lot of people are questioning the AI bubble. How big is the bubble? Is the bubble real? Is this the .com bubble type of situation? We're seeing Nvidia, Oracle, OpenAI just constantly pass around 300 billion or whatever the amount is, right? They're just passing around the money in between themselves, and technically inflating the value of their own companies, right? So some sort of absolute Ponzi scheme mechanics playing out over here. And now look at Oracle, which gapped up on their earnings report, a big gap up on their earnings report, completely faded, closed the gap, and is now crashing even more. So who's making money in this market? It's the short sellers. Michael Burry. Speaking of Michael Burry, he closed his fund like a 1 week early, right? He closed his fund just recently because of the negative press he was getting. And honestly, this sounds very, very close to the movie Wolf of Wall Street when he goes on the board and he puts out the percentage that his portfolio dropped by day. The numbers keeps getting worse and worse and worse and worse, and then 2008 happens, and all of a sudden Burry goes into being the best trader out there, right? So you only have to be right once, but right now Burry is right, I guess, for the second time, right? He's right for the second time. He was ridiculously short on Palantir, and look at Palantir over here, 15%, 25% pullback on Palantir. Today it was down 5% itself. So some real destructive systems across the board. You're seeing a lot of things blow up and give up a lot of their gains that they had recently. A big example is SNDK, SanDisk, a memory name which has been flying off to the north side recently, but ever since this red day over here has just been giving you good opportunities to look for a short. Example, today you got a nice short on the pullback into yesterday's low. It struggled to reclaim yesterday's low. There was a short here in my opinion, but the better short was right here. The much better short was right here when you're taking the low a day breakdown. That also happens to be the bouncy ball setup according to your boy Lance Brightstein. So you look at the bouncy ball right here. Let me just quickly delete. God damn it. Let me just quickly delete some of these drawings we'll have drawn. Wait, where did they go? Fucking disappeared. That's weird. But this is basically the bouncy ball setup right here. Bounce, whew, straight to the downside. So monster setup over there. Reject from yesterday's low. The white line that you're seeing is actually last week's low. I like to, you know, look at previous week's low, previous week's high. So previous week's low is 234, and you can see how 234 is basically because where is it? I guess previous week's low should be here, right? Because this counts as previous week. Last week. Oh no, this is this week. Ha, I'm an idiot. This is this week. So previous week's low been tested yesterday, or not yesterday, Tuesday. Got tested yesterday, even though it got tested both of those times and bounced. Today, it just did not manage to reclaim that level, got below it, bounced, rejected, sold off. So you could have started your short here, but this, like I said again, it was probably the best position to enter short on the breakdown, a low a day, very tight risk to reward. And boy, oh boy, what a trade today. SNDK short was down 20%. You had a similar setup over here on Western Digital as it breaks its own intraday opening range right around 156. And Seagate Technologies, another memory name that usually follows along with Western Digital and with SanDisk, another good short over here. So it looks like the AI bubble. Is there an AI ETF? I'm not sure. I can remember one off the top of my head, but it seems like the AI bubble has been clearly popping at the moment, and the market is obviously looking scary. People are worried. They are questioning themselves if they should be thinking about being full cash. I think Joel, which was the midday show, he was talking about how he might want to go full cash, but his wife's not gonna let him. I found that funny, but yeah, if big time traders like Joel, DDD, myself are thinking to go cash, then obviously you gotta be a little worried about the market. Even what is it, Michael Burry. When you see Michael Burry being heavy short, then obviously something to worry about. There has been times where Michael Burry has been wrong, but look, you only need to be right once, right? That's the beauty about the market. You only need to be right once, take advantage of it, and make that paper. Shout out to all the shorts at the moment. In terms of the earnings reports, there's really nothing too exciting for tomorrow or today after hours. I mean, there's a Gap, but do we really care about Gap? I'm pretty sure at the moment people are mostly going to be watching the same names that we have been watching, the big tech names, the stocks that have been very extended, like Robinhood. SanDisk is another one, potential red day 2 tomorrow coming into play. Trying to remember other names. Affirm. A lot of these stocks are blowing up. Circle is another one, all the way back into IPO range low. Figma is going down. Bullish is going down. So realistically, pick a name out there and just short the pops is what the current setup seems to be. It's just bearish sentiment across the board, ladies and gentlemen. Stupid bearish sentiment across the board. If you are a swing trader, if you're a long-term trader, you obviously want to be very careful. Now look at MicroStrategy. We were thinking that they would hold at the 200 area. They tried, but that's a failure to hold 200. Now we're bleeding below 200, which was the previous resistance. So not looking good over there. Is this adjusted? How do I remove it from adjusted for dividends? I don't want it to be adjusted for dividends. Oh, maybe this is not dividend, so it doesn't really matter. They don't have a dividend here. But the MicroStrategy crashing, Bitcoin going lower, Bitcoin back under the 90K area, now at 87,000. Yikes, ladies and gentlemen, yikes. Let me show you guys the trade I did today really quick. This is hilarious. I gotta do this. Hold up, chat. I gotta find the other image and show you why it's funny. Open link. So this was the image yesterday, and this was the image today. Absolutely fucking hilarious. Let me copy these images. Copy. Go to Twitter. NVIDIA before and after earnings report. First image is before, second image is after. Oh, I love the internet. The internet stays undefeated, chat. Internet stays undefeated. Let's go. Oh, man. All right, where are we? So coming to what was I gonna talk about? My brain froze after seeing that picture. I was gonna pull up my trade on the day. That's right. So here's my trade on the day. As I said, I did catch a long while the market was bleeding. I found a spot to go long, and my risk to reward was like 4:1, 3:1. So I actually had a very good trade, but sadly it did not have the momentum I wanted. I wanted to go at least to 600. It just didn't have the momentum or the juice to go to $600 area today. Sadly, just way too weak on the overall market. For those of you wondering why I went long, where I went long, basic idea, guys. Like 588, 589 was the previous area low over here. This red day candle, which was one of the worst days I've seen before today, bottomed out right at that 590, 588 area. So when the market goes into that 588, 590, and if you actually look at it on the 10-second chart or even the 1-minute chart, you will see right here, it goes into 590, bounces, goes into 590, just not able to really stay below 590 at all, which is honestly great, because then I don't have to do a lot of guesswork at all. I'm trying to see if there's a trend line that comes something like this, but it doesn't really set up properly. Like, you don't have to do much work. All you're doing is studying the chart, looking at the time of sales. Every time we go into 590, buyers are stepping right back in. So going long right here, 591, risking below 590 a little bit, maybe 589.50 or so. So you're risking about $1.50, and you get an almost free ride to 597. My best out was in this area, 594, 595. But you can see how the setup is so obvious for those of you who are studying the tape, for those of you who are studying the chart. Somewhere like this. Let me just bang, pow, pow. Come on, magnet. So breaking that little minor trend line on the 10-second chart, you can even say that's basically like a little bit of a, you know, there's like multiple trends. There's one that's steeper, then there's this one. This one is showing up with a little bit of accumulation around 590, and this is exactly technically where I went long. Actually, I was a little bit long over here, and then I added, and then I took profits, and then I was completely out of the trade. So you can see, where's the image? So started long, got more. I got a little scared, so I took out some size for a loss. I basically took out the size from 592 for a loss, and then I got back in at 590. My stop is at 589.50. 589.50 never triggers. Some selling into 592, some selling into 594, and then all out of the position right here as this consolidation breaks. A little mean reversion. You know, I don't really like to no, that's not true. I'm actually a very mean reversion trader, but technically, you know, just following the trend is a lot easier. Just follow the trend, because if you did that, you could have short the pop and enjoyed that ride into the downside. Now, what happens tomorrow will be very interesting. Usually after a big down day like today, chances are the market has a little bit of a bounce. You know, it's very rare to see back-to-back big red candles like that. For example, just compare it to this candle here, right? If history is to repeat itself, not that it has to, but sometimes it rhymes. If history is to repeat itself, you can expect the market somewhere between 595 and 588 today. 588 tomorrow. But if we do get a red day tomorrow on the market, another big down day from today's close, that would mean the market has to be under 585, right? So if the market is below today's close, which is 585, 585.50, then there's a lot of room, empty space here between the 100-day moving average and the 200-day moving average that you know, people will be worried about. That's basically almost entering into bear market territories once we push down into the 200. Lots of questions will be asked. People will think about dumping their positions for the most part. So just be ready. I don't want to be the guy singing doomsday. It's sounding the alarms and you know, talking all negative on the market, but right now things are not the brightest. Like I said, I haven't seen that wild of a candle at all. Give me a second. I'm just replying to. Okay, just responding to someone over here from my prop floor about my account and my account status and so on. Right, cool. So that's basically all she wrote. Just a quick little synopsis. I mean, China stocks are also looking weak. Baidu, potentially pulling back into its 200-day moving average. So everywhere across the board, guys, I'm just I'm just worried about what's going on right now. I know I just said I don't want to be the guy with the negative drums and the negative bells ringing, but sadly that is where we are right now. So if you guys have any questions in the chat, feel free to throw it. In the meantime, I'm gonna quickly head over to Polymarket and show you guys that people are expecting with the 60% probability that 40% probability that S&P 500 will hit a new all-time high by December 31st, which I don't think is true. I believe, give me a second, let me post it here. I don't think we're going back to all-time high by the end of the year, so I think buying no here at 60 cents on the dollar is actually a very smart option for people who are interested. So I'm just going to quickly show you guys how I do that. Open up the contract for the S&P 500, go to December 31st. I personally don't believe that we will be yeah, I'm okay with 10 shares for now, and then I can decide if I want to buy more shares later. Confirm. What is this? 10. Oh, that's cool. They started modifying how they show that. So $10 reward for minimum 100 shares, and a 4-cent spread is where you can farm the reward. Pretty cool. But I just bought my position. I bought 10 shares at 61 cents. That this market will not make a new all-time high. So we'll see if we're able to get profitable on that by going into December 31st. There's some time, right? There's a lot of time, about a month and a half or about a month left in the market. And with the way we're going, I really don't believe that we're going to hit a new ATH going into next year. So pretty good trade over there in my opinion. And there's other trades out there that you could look for in the same sense. For example, will any of the Mag 7 hit a new all-time high before the end of the year? I don't think Nvidia is gonna go for an all-time high if it didn't today, right? Nvidia really blasted off in the pre-market and then started going higher today in the normal hours, and then got slammed to the downside. So if you think in the same sense, buying no, that Nvidia will not hit a new all-time high before the end of the year. Will be 52-week high by the December 31st. So buying no at 76 cents might make sense over there. A lot of these are actually priced at a fair value, so I don't think there's a lot of EV, that's expected value, some juice for you to make money here. I don't think there's a lot over here. But once the lines start moving, I mean, Apple is trading in a way low liquidity, low volume, so you could buy Apple potentially at if you throw a bid at 12 cents, maybe you could get filled at 12 cents, and the chances are Apple will start getting dragged to the downside of the market's week. Right now, Apple has possibly the best chance to make a new all-time high because of the chart. If you just look at the Apple chart, it's still into the all-time high area. It only pulled back about 4%. We're still above the 50-day moving average. So Apple has the best chance to make a new all-time high, but it could also get dragged down with how the market's moving. So if you believe that, you know, you could start throwing some bids here at 11 cents, 12 cents, and pray that somebody gives you a fill. Right now, I'm not sure you're gonna get that fill because the liquidity is too low. This market seems to be a very, very new market, and that's why you see the money is just way too illiquid at the moment. But boy, Nvidia, like if I can throw a bid at Nvidia at 13 cents and somebody sells it to 60, 68, and then I'm the next best bid, hopefully someone fills me there and I can make some money on this position. So these markets are getting very juicy. Remember when I said poly market is going to be one of the best tools out there for the stock market? Now they're introducing brand new markets every single day. That just makes this even better. For example, Nvidia closes on the week of November 17th above what price or within what range? Nvidia will hit what price in November? The highest price, that is. Nvidia will close above what price in November? So these are basically 3 options markets, right? Instead of the normal option market we have, these are basically 3 different. I see another one over here. 4 different option markets that you can use as a tool to help you gauge and make a trade on the stock market, on the options market. You can hedge it with poly market and all kinds of fun stuff over there. So guys, every single day I keep showing you something new about poly market. I really urge you guys to go check it out. You know, if you're not learning, you're falling behind, and that's the worst thing you can do in this game. Okay, if you are stagnating, you are dead in this game. You always got to be willing to learn new things, willing to explore and expand your knowledge base, and no better way to do that than go through poly markets and just analyzing how the markets work. Look at the bids, look at the rules, look at the way it resolutes the information. How are people positioning themselves? Like, this has already $600,000 traded. This has $250,000 traded. So money is clearly flowing into these markets more and more as we speak. You can even track indices up or down. I mean, things are just getting out of this. They're going crazy, and I might be a little wrong in saying this, but I really believe that poly market very soon and predictions market in general are going to replace and eat up the stock market. The stock market participants will start using poly market to hedge. You're gonna see people who don't have $2,000 to trade with on the stock market because of the new PDT rule. Currently is 25,000. You gotta have 25,000 USD in your bank account to be able to trade on the stock market, or you are a pattern day trader. Trump wants to drop that down to 2K, but if you don't even have 2K to trade with and you still want to trade the stock market, you have a great option. It's called predictions market. Now that market is basically going to take away the liquidity that options was going to get, right? Options markets get that liquidity. They're not going to get that liquidity anymore. Poly market and prediction markets are going to take that liquidity away, and that means less and less juice on the stock market. Right? If not enough options gamblers, not enough degens are going out there buying options and YOLOing options, then the options writers don't have to offset their delta position by going long or short the stock directly. And that means less liquidity on the direct market, less liquidity on the options, more liquidity on poly market, on Kalshi, and other prediction markets. So for me, I just don't see how these markets don't take away money and liquidity from the stock market and eventually find a way to replace it. I just don't see how it doesn't happen. So I'm very bullish. I have been spending a lot of time learning these things, and I urge you guys to learn this too. And obviously, you guys have seen me trade earnings calls. The last Nvidia earnings call, we actually were profitable on it. The next earnings call is Dell and then Snowflake. So we're going to be trading those live when those happen. They're a little bit of a time away. I think they're next week. So make sure you tune in for that. And again, ladies and gentlemen, you have MSCI on Monday. That's the Morgan Stanley rebalance on Monday. And you have tomorrow options expiry. So nice options expiry date, which means a lot more liquidity throughout the day. Things are going to be a little bit more crazier than general. This happens every third Friday. So just be ready to see some unexpected things. That's basically all she wrote. I don't have much else to talk about. I hope you guys tuned in for the midday show today, because we were actually doing a lot of fun stuff over there. We were showcasing how to use Perplexity Finance, how to use Polymarket, and all the other fun stuff. But all that, I do that with you guys every single day anyway. So if you are a regular TraderPrad viewer, then you guys already have seen all that fun stuff. Let's wrap it up, I guess, with a quick little look through the last things I usually wrap it up with, which is first the Fed rate tool, then the IPO dates. What the fuck wrong happened with my dog? First the Fed rate tool, then the IPO dates, and then we'll wrap it up with the econ calendar. So Fed rate tool looking worse again. Now coming in with a 60% probability that we're not gonna get a rate cut, and I believe JP Morgan came out today and said at 1 o'clock or so that we're not getting a rate cut at all. So clearly negative news around the rate cuts and interest rate decisions. Very interesting to see how this will play out. This is on the 10th of December. IPO calendar, we had an IPO today. It was very, very muted in my opinion. There was no real trading opportunity, so didn't have fun at all. I mean, I was looking at it, but there was no trade to be made, so no fun. And tomorrow, smaller Liberia. Is that Liberia? No, Liberia Gaming Operations. I'm guessing some sort of a gambling company. Very small, not interested in this one. This one's a decent size, but sadly it's an acquisition corp. That means it's a reverse SPAC merger. It's a blank check company, and those ones we don't really care about, those IPOs. So IPO calendar seems to be coming to a dead end halt for November, and nothing really hot going on over there. And as for the economic calendar, tomorrow I noticed that there's a bunch of Fed members talking, so let me just quickly summarize that for you. 7:30 all the way up to 8:30, you have a couple Fed members talking. You have the federal balanced budget sheet coming out, some other S&P numbers such as the S&P PMI. That's going to be a good one. Michigan sentiment numbers, with how interest rates are being probabilized at the moment. Is that even a word? Probabilized. How interest rates probabilities are changing at the moment, from being bullish to bearish. These Michigan sentiment numbers could help or break the market tomorrow. Sometimes these numbers don't do anything to the market, but when volatility is high, the VIX was at what, 25? TH, the hate watcher, was mentioning the VIX yesterday, and I basically dismissed him. I said it doesn't matter, because as long as Nvidia is reporting and moving higher, the VIX doesn't matter. Boy oh boy was I wrong on that, because the VIX shot up even more today. VIX is up what, 11%, trading at 26. So volatility is higher, and when volatility is higher, uncertainty is higher, and people are worried about interest rate decisions, and that's when these Michigan sentiment numbers and other sentiment numbers in general might play a role in moving the market. So make sure that you're being a little cautious around 10 o'clock. It wasn't me, says TH. Then maybe it was John Monsewers. I'm not sure who it was, but somebody in the chat yesterday said that the VIX is going higher, and I basically dismissed them. I said it doesn't matter if Nvidia is reporting the way it did, but clearly it does matter. Let's go take a look at the last thing, fear and greed index, and then we can wrap it up with that. Where is the fear and greed index at the moment? This is for the crypto. We're currently sitting at extreme fear. There you go. Sitting at extreme fear at the moment on the fear and greed indicator. There is a saying though, when there's fear in the market, be greedy, and when there's greed in the market, be fearful. Usually that means buy the dip as the market keeps going lower, and when the market keeps going higher and your mom and dad are calling you and asking, hey, what should I do about the stock market, that's when you start taking profits and walk away from your position. That's the kind of the methodology there. But don't use that methodology to start buying the dip and catching a falling knife, okay? We talked about how to catch the right side of the V a couple days ago. There's also a YouTube short, Instagram short that I posted, so make sure you go follow me on all social medias. The link is in the description. I will also post it in the chat right now. Make sure, yes, probabilize is a real word. Hey, okay, there we go. Make sure you click on the link and follow all of my social media links. You will find the shorts that I'm talking about, which is catching the right side of the V. Go check out that video real quick and you will understand exactly how to execute that setup. Along with that, my affiliate sponsors are all right here, so make sure you check out all of the tools that I use to day trade every single day. Polymarket, Traders Insight, Finviz, TraderSync, Benzinga, Flash Research, all the tools that I use every single day. Did you cover Bitcoin is moving to the Japan 30-year? I mean, yeah, the Japan 30-year note, the bond is a little important, mainly because so how it works is they take they borrow money from a country that has lower interest rates, like Japan, right? They borrow money from Japan and then they use that money to invest into the American stock market. But if Japan's interest rates start going higher, then the money that they borrow from Japan will now cost them a little bit more than they previously planned to. So what they start doing is they start dumping their position on the American markets, on Bitcoin, and then they use that money that they have made by investing in the lows and having it go up. They take their profits, and that's why you're seeing the markets go down, right? They take their profits and they get ready to repay their loan and walk away while the interest rates are still low, because interest rates are going up higher. That's the reason why the market crashed in April, right? When the market crashed in April, that was the whole Japan interest rate scare and the carry-over trade. It's called the carry-over trade. That could come into play again right now. It could very much be a causing factor for all of this downside move. But you know, I tend to kind of just focus on the technicals, focus on the chart. The macro matters a lot, right? Obviously the Japan thing matters a lot, so make sure you have that in the back of your head while you're trading. Look at the 30-year bond on Japan. Look at how interest rates over there might be playing out. Our interest rates might be also having some issues, right? Our interest rates might not be dropping in December. A lot of people were expecting another 25% rate cut on the market, or I should say 25 beeps rate cut on the market, but we're not going to possibly get that this time. So if we're not going to get that, that means our money is still going to be expensive to borrow, and people don't like that. Investors don't like having to borrow money at an expensive rate. They want to borrow money for free and put it into the market and watch the market go up and make them money, right? That's how they like to play this game. So interest rates being high, or at least not coming down on the American side, might directly affect other countries. And if other countries as important as Japan get affected, that could double impact our market. So gotta be worried about that one. For me, it's as simple as you know, just wait for the market to go test the 200-day moving average. I think it's possible that this could go test it, but this is possibly coming up to here, and then we're dropping into this area. So that's what I'm looking for on the market at the moment. Well, I'm not an oracle. I'm not I don't see the future. I'm not a fortune teller. But what I have seen as patterns that are very repeatable and easy to take advantage of as long as you're studying. Just look back on the charts in the past, see how the markets play out previously, and just by analyzing history, you can try to make sense and rhythm and rhyme out of the trade and try to make some profits out of it. QQQ now at 583. We're already below today's close and looking to keep selling off. So if the market opens somewhere down here, potentially a bounce back, but then a reject from there. Ideally, I want to see the market gapping up tomorrow and then staying above 590. But if we don't stay above 590 or full 589, oof, that's a lot of questions to be asked. That's all she wrote for today's stream. I'm gonna call it 15 minutes, a little bit too early, because I'm gonna go walk my dog while the sun is still out, which I don't think it is. I think the sun has already gone down. It's probably cold and no sun at the moment. Let me see. What's the weather like? Partly cloudy, 3 degrees Celsius, and sunset at 4:48 p.m. So yeah, it's not sunny anymore. I should have taken my doggo out at 2 o'clock. I didn't, but I'm gonna go do that. Guys, final stream of the week. Thank you for hanging out with me. Enjoyed every single second of it. I'll catch you guys Monday. Same time, same place. And then obviously every Thursday, also at the Stock Trader Network at 1 o'clock. Go make some money tomorrow. Peace.